Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm just a financial advisor making this video that is not financial advice. I want to talk GameStop stock, some happenings. I want you to know what's happening, not just in the world of memes, but also what's happening fundamentally with the company. And we have some huge updates from the company itself that genuinely justify a run in the stock price multiple times where it's currently trading. And so I'm here to talk about it. I'm glad you're here to listen to it. Without further ado, let's get into it. Beautiful. I know you're probably thinking, Jeremy, are you awake? Isn't it 4 something in the morning? Shouldn't you be asleep? I've been awake since 1 something in the morning. Okay? Because of this tweet. Just horrible to wake up and use the restroom and see this in your feed. It's like, man, how am I going to go back to sleep now? Literally the White House. Actually the real White House. 2.9 million followers. What do they decide to post on X? They decide to post power to the players with Don himself in some Halo attire. And power to the players, if you don't know, is literally GameStop's slogan. And not only that, they posted it in reply to GameStop declaring the console wars as over. Without further ado. So fun. So fun. I mean, sometimes you just got to be excited for some memes, for some stock movement, right? And hey, thanks to the administration for drawing attention to a company that is so dramatically outperforming and is so dramatically undervalued fundamentally. I want to talk about it because I just crunched the numbers on what the updates we got from Cohen about the collectibles business performance. What does that mean for the valuation of the collectibles business? I want to dive into it so you guys can see, man, why is GameStop going up? Okay, is a post on X from the White House helpful for the near term movements, for a little bit of extra options flow, a little bit of extra speculation? Sure, but it'd be foolish to say, oh, GameStop is way overvalued at 25 and this is all just a bunch of trolls on the internet, and really it should be way lower than that. I want to show you guys how to value the company in light of what we know about the company. And also, I just want to say thank you so much to those who have subscribed. Thank you for the comments, for the likes. Thank you to those who have joined the channel as fans and friends. No pressure to do any of that, but if you want some extra perks, it's there for you. And all the earnings from this channel do go to DRS Book GME shares. So I appreciate it a bunch. I appreciate it a bunch. And hello, Kevin from Florida. Hello, Libertine. Hello, Lexo. Hello, John. Super glad y'all are here. Yeah, before I get into in the fundamentals, let's actually dive into Cohen's tweets as well. Gee, not Michael Cohen. Who is Michael Cohen? Because not okay. So he reposted this post on X from the White House, as well as that's so I haven't even seen this one. That's so funny. As well as this post right here that you just referenced, Libertine. So again, I'm not the biggest tea leaf interpreter out there, okay, but Ryan Cohen says I challenge Greg to a Mario Kart race. Greg is this guy who interacts with GameStop that's fun and trolly. No one really knows who he really is for sure. But people on Reddit have mentioned that Greg, I mean, who often talks positively about GameStop, like he's definitely, associated to a certain extent with GameStop. He historically references Mario Kart when he's talking about shortcuts, ways to get somewhere faster, particularly as it relates to stocks. And the fact that Ryan Cohen said to Greg, I challenge him to a Mario Kart race, has led some to feel a little bit more bullish than usual about where is GameStop stock heading in the short run. Is Ryan Cohen somehow insinuating that he's about to take a shortcut, that GameStop's going to take a shortcut and actually begin to see some pretty rapid price improvement? We've seen huge fundamental value improvement, and the stock price is lagging behind incredibly. So there's plenty of room for a lot of stock improvement before we're even getting close to overvalued on a fundamental basis. But I did want to show that post as well, because it's not, it's either nothing or it's just a slight kind of, vibes, positive vibes, a little bit of hint, or it's a relatively strong, signal from Cohen that the stock's about to run. What's up, Jay? Glad you're here. And yeah, I agree. Ryan Cohen is, and is he the quote unquote the next Warren Buffett? There's only one Warren Buffett, but Ryan Cohen is the next Ryan Cohen, and I feel really good about being invested in the company that he leads. Definitely once in a generation opportunity. So let's dive into what I want to talk about with this fundamentals valuation, because especially if we're going to see GameStop run, if options start pouring in on this is it, this is really it, and you start to see the price go up fast, you want to have a really, really grounded sense on what is the fundamental value of the company, mainly so that you don't sell too early, right? If you're getting in on a hype movement, is it all hype or is it actually justified? And you want to know the difference so that you can allocate accordingly. You might want to have some in the YOLO hype bucket. You might want to have some of your shares or some of your calls in the fundamental valuation story. And where does one price target kind of bleed into the next? So let's talk about worst case, floor, fair, and fly scenario for the collectibles business, because before we learned that Power Packs is doing hundreds of millions of dollars per quarter already, which we learned, before we learned that, the collectibles business on a weighted average basis was worth about $17 billion. But what we learned is a couple things. We learned that revenue is about twice as high on a worst case scenario. And then if you model that out, so I've split this now to say what's the profit margin, like what's the revenue on the legacy collectibles business, basically the collectibles business that we know that includes GameStop's grading partnership with PSA. It includes GameStop's buying and selling of traded cards, of graded cards and trading cards on their website, but does not include Power Packs. So everything they've done with their collectibles business, but not Power Packs, I would call that their legacy side of it. And then what is Power Packs doing in an annual sense? So we know that Power Packs in Q3 and Q4 is on pace to do $500 million based on what Ryan Cohen shared in his interview. And I've talked about that in past videos if you want to dive into it. But that's $1 billion annually and still so much room to grow. So again, worst case scenario, you're saying, let's just say the 1 year revenue is exactly what it's on pace to be. If you're talking like the forward 12 months, and the lowest profit margins reasonable that you could kind of model out is that the legacy business is getting a 35% margin and that you're getting 10% on Power Packs. Now, if that total business, if these margins are true, that means your business is making 170 million once you net out 280 of SG&A. So net operating income of 170 million a year on a worst case scenario. And then what do you value that from a PE perspective? I decided to get more granular with it because we are in an exploding growth business with this collectibles business. GameStop's entrance into this business is brand new, right? They just started their collectibles business. I mean, they've had a collectibles business forever, but it's been selling, t-shirts with Mario on it. They just started their graded card business. And so GameStop's existence in that business is brand new, but also the graded card market is exploding as well. And so what is the way to give a PE, a way to assign growth to a business that is new? And because it's new and because the collectibles industry is growing so fast, it's going to grow really fast for some period of time and then taper off somewhere, right? So I'm saying for a 5-year window, let's say they grow 30% year over year. And then let's say that GameStop's collectibles business grows just 11% year over year after that. That is the kind of realistic floor scenario. And you might say, man, a 45 PE, that seems a little rich, right? Because the S&P 500, the PE is a 31, and the S&P's earnings growth is 11%. So how'd you come up with 45? Glad you asked. Glad you asked. So if you model out the S&P 500's earnings, okay, so a PE of 31, earnings growth of 11% means that after 1 year, you will have earned 1.11 times this year's earnings. And then after 2 years, in that second year, you'll earn 1.23 times year zero's earnings, right? So whatever the earnings is right now, because your earnings are growing, right? Your it's just a way to model the earnings growing, okay? 11%. And so you map that out, and basically after 14 years, you have earned, the company has generated cash equivalent to 33 times this year's cash, right? year zero, you will generate 33 years worth of that cash after 14 years. Or sorry, 33 times that cash after 14 years. So you could say that for the S&P 500 for a company on average, people want to break even in 13 and a half years. They want to make their money back. They want the company to be able to generate income in 13 years, equivalent to whatever multiple that you're paying. Sorry if this is getting confusing. I'll just show you how it works with the collectibles business. So we talked about this floor scenario for GameStop, 30% earnings growth for 5 years, and then 11% after that. If you just take those multiples and you stretch it out, that means after 13 years, the company will actually have generated 60 times current year's earnings. 60 times current year's earnings. And I am just saying, okay, well, what if you gave them a PE of 45 instead of that full 60? So you could argue right off the jump that even in this worst case scenario, that actually the collectibles business would justify a 60 PE instead of a 45 PE. Because in the same amount of time, you will have broken even. But I'm assuming that for a higher growth business and a new business, that investors might want to break even on their investment sooner. Because you're baking in a lot of growth, maybe they don't want to wait 13 and a half years to break even. Maybe because the break even is conditional on earnings growth for a business that's newer, that you don't have as much history to be able to project. To your point, Libertine, like it's difficult to forecast a brand new business. You're making educated guesses. You can't truly model it, right? They haven't even reported a single quarter yet of their earnings. We just happen to know what their earnings are going to be for this year because Cohen said they're going to be just about a third of total sales will be collectibles. And we know with a lot of clarity, plus or minus $150 million, what the hardware and software combined is going to be. So we have a really good idea of what the total revenue is going to be for collectibles, which means we have a really good idea of what type of run rate they're on. That said, valuing their business in this worst case scenario, really modest growth, and then it tapers off. I'm saying let's call that a PE of 45 so that you break even in 11 years instead of 13 and a half years. And that gives you a worst case scenario of $7.6 billion value for just the collectibles business. And I'm saying that's a 15% chance. It's a low odds to me based on the explosive growth that we're seeing in the collectibles industry, combined with the very clear demand for stores of value that are accessible and lower cost, combined with the huge market for stores of value, right? The stores of value market is trillions and trillions of dollars. The collectible cards market is 15.8 billion. So the ceiling for how large could this market get, we're not even close to. The demand for it's growing, right? And GameStop is just beginning its personal journey into this business line. And they have a partnership with PSA, which basically has monopolized the grading of graded cards. So again, worst case scenario, 15% chance this happens. Of course, there are quote unquote worst case scenarios, but realistically, what would you kind of guesstimate, model out? It's a $7.6 billion business, just their collectibles business. And then you add in their worst case kind of hardware and software business, and you've got an $8.7 billion retailer And this is not factoring in GameStop's asset management business. This is just their retail business. You talk about the kind of the fair case scenario, what to expect. You're talking about 1.1 and 1.4 billion in annual sales, 40% margins on the legacy, 12% on power packs, 40% growth for 5 years, and then tapering off at 15%. And again, how do you value that from a PE basis? If you go to where I just was, where are we? Assigning the collectibles business a multiple. In the fair scenario, after 13 years, you will have made 100 times your earnings. If you make 40% growth for 5 years and then taper off at 15, you will have made 100x earnings in 13 years, which is the time frame that your average investor expects for their average investment based on the S&P 500's multiples. So I'm saying you can break even in 10 years. So in this worst case scenario, a more conservative scenario, let's say the investor wants to break even in 11 years. Now with a little bit higher growth, we're saying you want to break even in 10 years. You can have a PE of 57. I took another 2 off of that. Let's call it 55. Now you're at an $18 billion collectibles business and a 60% chance that happening, 25% that basically the explosive growth continues and not even continues quite how fast it's currently gone, because we know right now their collectibles business is literally growing 100 to 200% year over year. So no one's going to model that continuing forever. But could they do that for another year? They definitely could, you know. But for simplicity's sake, instead of saying 100% for 1 year and then 70% the next year and then 50 and then 40 and then 19 from there, it's like, let's just say on average 50% growth for 5 years, which is basically GameStop's market share continues to grow and the collectibles business continues to have secular tailwinds to it, which I would say there's a great chance of that. I'm saying it's 2.5 times more likely that Power Packs and GameStop's collectibles business is impressive but not explosive. I'm saying 2.5 times more likely that that happens. But there is a very, very real possibility that it's an explosive business. 45% margins for the legacy portion, 15% margins on power packs. Now you might say, how are they going to get 15% margins? Well, you have the 10% instant buyback offer, but there's a 6% seller fee with that. So there's 16% right there. And then you have the appreciation of the actual physical cards in between the times where GameStop is selling it. You might say, well, what's PSA get out of that? Why wouldn't PSA get some of that? Again, there's some appreciation there, so there might be a cut for PSA, but we don't know the details of their partnership with PSA and Power Packs. It could be that their partnership is, hey, we'll make money because you're vaulting the cards with us, and we'll make money when users decide to sell through us on eBay, and you, GameStop, can make all the money related to the Power Packs, instant buyback offers, and sales. That could very well be the partnership. That's not unrealistic at all. So again, you could say, if you want to get more aggressive, you could say 20% margins on Power Packs, right? But let's say it grows 50% for 5 years and then 19% after that. Now, how would it continue to grow at 19%? It really, again, comes down to what do you think the collectibles business, the graded card business, is going to do long term? And ultimately, there's many multiples, many multiples higher that the graded card business could get. Just even if you were a believer in fiat currency, let's say you don't think fiat is on the decline. You think fiat currency is going to maintain its dominance. It's going to still be $150 trillion in valuation, which is what it is right now. $150 trillion globally held in fiat currency. Let's say you don't think that's changing at all. And you don't think that the um, collectibles business, like the collectibles industry is growing at all? You think it's just capped at 500 whatever billion, 563 billion, 53? Well, the graded cards is only 15. It's only 3% of that pie. And I would argue that this pie is almost certainly growing, and that the pie that wants to be held in alternative assets that are less convenient to hold often, much higher inflation risk, even when you compare it to other collectibles in the industry, right? Graded cards are much smaller. You don't have to store them yourself. You can vault them with PSA for free. PSA insures them for you. They're much more personalized, right? There's easier ways for someone to become attached to a specific type of card game or sport, whatever, right? And so, as far as a store of value, there's a lot of tailwinds on the cards industry. So, again, could you get more bullish than these assumptions? Yes. But I'm saying 25% chance. If you wanted to make another hyper bull scenario with a 5% odds, you certainly could. But with these numbers, you're doing 530 million in profit. And then what type of PE do you give this business that's growing super fast for at least several more years? And then after that is still growing in a way that outpaces the overall collectibles industry because it's gaining market share in the collectibles industry, and also that outpaces the S&P 500, right? Like, and it's because GameStop is not just the collectibles industry, it's also GameStop's business, right? GameStop's piece of the pie that's compounding as well as PSA's dominance continuing to compound and GameStop benefiting from that partnership, right? All that to say, how do you give a PE for it? Well, let's go back down to here. And in the fly scenario, you model out 50% growth and then 19, you will have made 163 times earnings after 13 years. So I'm giving you a PE of half of that. Like literally half. And your break even again is in 10 years instead of 13, which is the average for the S&P 500. And by the way, if GameStop even achieves a fraction of these valuations, guess where they're going to be included into? The S&P 500. And if GameStop's included in the S&P 500, do you think that that would help GameStop stock? It certainly would. Do you think it would give investors peace of mind for a longer tail to say, hey, since you're in the S&P, maybe I'm willing to wait 13 years instead of 10 years to break even? Certainly. I mean, that's not irrational. That's not overpaying. We're not even talking about someone paying above fair value because the situation is so good. I'm saying the actual fair value, right, is just genuinely very high. So when you put a weighted average on these probabilities, you're looking at a $23 billion collectibles business and overall a $30 billion retail business. Now, if you wanted to say that the fly scenarios will play out and you're not too concerned about the mid case and the bear case, then you're looking at a $61 billion retail business plus how you value them as an asset manager, which is some multiple of their cash. It's at least their cash plus however you value a multiple on that cash based on Cohen's investment history, plus however you project their ability to generate more cash. Because as we've seen quarter over quarter, you have the warrant issuance that they gave in Q3 that people anticipate within a year will convert to $2 billion of cash. They raised $3 billion from Q1 to Q2, $2 billion from Q4 to Q1, another $3 billion from Q1 to Q2 of last year. So to say that this company is, as an asset management company, is only worth its cash, well, that didn't age well Did it? Right? If you 15, 18 months ago would have said their asset management business is crazy, no one cares about that. They're just worth their cash. It's like, well, they've literally 10x their cash since you thought that, right? So why would you think that, oh, now they're capped? They're just all they're going to have is whatever cash they have now, and you can't value that as any more than it is. Oh, and don't forget about the convertible bonds, right? You can't project how GameStop is absolutely in no way going to be trading at lower than the conversion price in 5 years. So until you can't see that, you can't know that they're making over five, which is over $1 per share of cash value. To extrapolate that out for the next 5 years in their convertible bond window means that they will definitely have more cash on the books than literally their, without a doubt, with these two specific convertible bonds, that GameStop can dilute them if they want to. They would only pay them back in cash if they wanted to. And so, yes, you really can value their 10.3 billion in assets as 10.3 billion in assets. You really can. The only encumbered assets are these convertibles, which you go back on my channel, watch my video about the convertibles. You don't have to stress about the convertibles. Anyways, so what type of multiple, how do you project GameStop's ability to generate more cash? How much more cash do you think they're going to be able to get? You think they're going to be able to raise another 1 billion a year? Like, well, they just did 10 billion in the past year, right? So is it 1 billion? Is it 2 billion? Is it 4 billion per year? How much more do they continue to raise, particularly when they've communicated on their 10Ks that their top priority is their asset management business? Their top priority. I'll show you. I've showed it in past videos, but I'll show you again because why not? Since we're all here anyways, why don't I just show you? Is it business priorities? Okay. Our strategy, number one, using cash and other people's cash to maximize shareholder value, including investments or maybe acquisition opportunities, aka our number one priority as a business is our asset management business. And we just looked at a retail business that's worth anywhere from 29 to 61 billion dollars, the retail business. And GameStop saying, hey, by the way, our retail business is opportunity number two. That's the second priority. That's the thing that we're less concerned about. You had Ryan Cohen interviewing NBC with Charles Payne a few months ago, and he said the long-term value of GameStop probably is primarily going to be associated with how they grow and utilize their assets, not primarily their retail business. And yet, their retail business is already worth multiple times what their total market cap is right now. People see 7.51% pre-market growth, and they're thinking, oh my gosh, it's a squeeze. That's a 10.96 billion market cap for a company that's retail business is worth 3 to 6 times as much. And their asset management business, according to Ryan Cohen, according to their communicated business priorities, according to their history as it relates to growing their asset value, is worth multiple times what the retail business is worth, right? I'll get into it in a future video, but their asset management business is worth 66 to 120 billion dollars. Sorry, let me move it over so you can see it. Asset management business. So if you want to add them together, This is a $100 billion company, maybe even a $200 billion company. So why is GameStop going up 7.5% pre-market? Honestly, probably related to this post right here. But why is GameStop even available for $10 billion when it's fundamentally supporting right now on a weighted average basis a 10x price improvement from there? Well, that's a story for another day. Maybe even a 20x. And this is not a ceiling. This 182 billion, this is not a once they're worth that, they're definitely overvalued. This is a once they're worth that, let's see what has transpired. Let's see how much they've grown their businesses fundamentally. Because I bet at that point, these revenue numbers are higher, right? I bet their retail business is doing more than 6.2 billion in annual revenue. I bet their asset management business is doing more, than just the 10.1 and whatever that they have on the books in assets. So this isn't like this price target is not a in 10 years. This isn't a in 5 years price target. This is a how would you value the company right now? Right now, price target, fair value right now based on how you would reasonably project the cash generation of their businesses, and you discount them for a present value that's valued at a multiple at a break even rate even more conservatively to the S&P 500, and we haven't even talked about what will GameStop's inclusion in the S&P 500, which is an inevitability, what will that do to the stock? Should we just give a 25% premium right now to these price targets since we know that that's an inevitability, right? If you know they're worth right now $100 billion and they're profitable quarter over quarter sequentially for years on end, should we just say, well, in light of the fact that they're not in the S&P and they're going to be, and so such a high portion of the $127 trillion of valuation of the stock market, such a high portion of that is concentrated in indexes, primarily the SPY. Well, let's just say that, okay, well, maybe 215 is really 265, right? If you really think it's 215, you might as well call it 265 because then you just have the index bump, right? So again, why is GameStop going up? Because fundamentally it can support a much higher valuation than where it's been trading historically. All that said, I'm all about the short-term price movements. I'm all about the swings, make money on swings. It's fun to read tea leaves. I appreciate the meme administration. But the bigger story with GameStop is not, ha ha ha, a picture on the internet and now the stock is going higher. The story is, why in the world isn't this stock already 5 times higher? At least, right? I mean, the worst case scenario, what's the worst case scenario? The worst case, if you think everything is horrible with this company, it's still worth twice as much as what it's currently trading at. Just crazy. What's going on this morning, chat? Let me catch up a little bit. Trip Hazard, he says he's skeptical. You're skeptical on this price movement. You're skeptical on this right here. You're not skeptical on the company fundamentally. You're just thinking, hey, this is kind of weird. Why is the White House posting about our company? And is this just some type of trap? People rush in as soon as market opens Monday morning and then they slam the stock and we end up at max pain on Friday. Totally warranted skepticism. I'm not trying to suggest that it's about to open and be up 20% and then 50% and then 90%, although I would be here for it, I'd be super pumped. And fundamentally, I wouldn't be stressed, right? If I am going to bed tonight and it's at $50 a share, I am not like freaking out like, "Oh no, we're in a bubble." You know, it's like, okay, so now we've made it almost up to the worst case scenario, you know, but we still have plenty of room before we are pricing in genuine upside in the business performance. Um, but yeah, some pre-market volume conversation going on in the chat. Let's see. The volume does not update unless I refresh the page because what is this website anyways? 250,000 in pre-market. What's up? What's up, Dookie? What a name, man. What's up, Andrew? Yeah, what a time to be alive. Stock Jockey, what is up? Oh, they're raising the price on Pokemon cards? Is that true? On their power packs? Let's check it out. So, one update that we got with power packs, I mean, the big business update, of course, from Ryan Cohen is, hey, we're selling a crap ton of them, right? Probably 200 million in power pack sales in Q3 and maybe 250 or 300 million of power pack sales in Q4. Crazy numbers. And we learned from Ryan Cohen that the bottleneck is inventory. They sell everything they can get their hands on. So one thing we learned is that the period of time by which you can sell your card back to GameStop has been extended. It's no longer an instant offer. It's now a 7-day window that you can sell your pack to GameStop. Okay, so I guess maybe I am not interpreting your comment correctly. Because right now, at least, the price for the power packs is still the same. But maybe that's just an idea you're having, Stock Jockey, is what if they did raise the price, right? That's the other way to, if you want to maintain inventory, you can get more inventory, which is what GameStop's trying to do. That's what they're focusing on. But you could also raise the price and therefore you lower your sales rate a little bit, but you might make more money and you won't run out. And they haven't run out yet, really. They did run out of just the starter level of Pokemon for a couple days, but they've been stocked enough to where you've been able to buy these any day you want to, and they're officially public now, no longer only in beta. So right now it seems like they might be pricing it right where it should be, you know. But it's definitely a good point that if inventory really does get that hard to source, it's like just raise the price. But it doesn't really help you that much unless you're leaving these ranges unchanged. If you raise the price, but then you also raise the odds correspondingly, then you haven't done anything. That's why they have these different levels. You can raise the price on yourself if you want to, but to raise the price and or to worsen the odds would be a way to stymie their sales a little bit to let inventory catch up if they're not able to keep up themselves. Good problems to have, though. What's up, Steven? Yeah, we're up early, bro. I've been up for 4 hours, dude. You know what I was doing? I was freaking modeling GameStop sales. It's on my spreadsheets, man. Chris Nelson, good morning from Long Island. Ramses wants to see a Roaring Kitty tweet. Would be awesome to see. He wants me to look at the options chain. I mean, does the options chain, maybe chat, y'all can help me out. Does it update like what I'm interested is by end of day, what does the options chain look like? Because I'm expecting a decent amount of YOLO artists to buy into options. Because you've got obviously Ryan Cohen making his indications that hey, some short term good news might be coming. Obviously, you got the White House pitching in the story. And then you've got, a little bit of traction with other just YouTubers and influencers that are starting to get public about their calls that they're buying in a very kind of meme-ish sort of way. And then, of course, you also have the Richard Newton kind of Babe Ruth graphic that's due up in about a week now. So I'm not that interested in what did the options chain say about this week based on Friday's close. I want to see what happens today to the options chain. Okay, thanks, Benji. Benji says options chain does not open during after/pre hours. That's what I thought because you can't transact them. And I will not be streaming by the time market opens. Unfortunately, I will be back on dad duty. I'll be taking care of my little baby and my baby boys who are 6 and 4. But I wanted to hop on while I could to talk a little bit about the stock and just let you guys know that, hey, fundamentally, we're sitting pretty. We're sitting pretty at 25. But man, I won't be live streaming the whole day, but I'll be streaming this ticker symbol all day to myself for sure. So I'll be tracking it with you guys and it'll be really fun to see what happens. Arca says good morning. What's up, Arca? Friend of the channel, man. Great to see you. He says a little bit of FOMO, a little bit of algo, not enough volume for this to be meaningful. I mean, yeah, it's 5:30 a.m. Central, so I don't think that we're gonna know until we're in we're in normal hours what is the volume really going to be and what's the impact going to be. But I'm thankful to have random catalysts from memes because anything to help the stock begin to reflect the fundamental valuation it already supports, it's kind of like I consider that a win. What's up, aging wheat farmer? It says, good morning, my Y2K friends. Yeah, dude, the Y2K sub club. It's got 149 spots left in the Y2K sub club. Y'all, the next sub club, it's funny that this was the post that we're talking about because the next subscriber count benchmark that I'm shooting for is going to be 2525. So that'll be the next sub club. And the reason I'm picking that number, other than it being fun, is that it was the start of the Human Covenant War, aka the Halo narrative, right? So, and then 1 a.m., 1:30 a.m., I see this from the White House, and I'm like, did he know? Did he know about my next sub club? Because we're waging war against Wall Street, right? The Human Covenant War 2.0 is upon us, and so I'm excited for that next sub club. But y'all are the earlier sub club, the Y2Ks, the 1997, the Nintendo 64, epic. Warrants are up to 375 after Friday's close. That's exciting. Libertine says, look around. It's not just all a coincidence. It's true. Hey, what's up? What's up? How do you pronounce your name? Kayem? The Aussie ape. Can you give me a phonetic way to say your name? Glad you're here, man. Thanks for joining. Super exciting times. Super exciting times. Woo! Woo! So ready. Makes me want to go play Halo. Which I guess is the whole point. You know, I guess that's the whole point. Is go play Halo. Ole says, first thing I did this morning was scrolling through X. Could not believe what I was seeing. Thought I was still sleeping. Crazy, crazy stuff. Crazy stuff. I was, I played a little bit more Halo 2 than Halo 3, but I was, uh, I was all on the shoddy, the shoddy squatty. If you squatted, right, they couldn't see you on their little map. I'd find a nice little corner somewhere. I was just a role player. Okay, I wasn't gonna take my team to victory, but I was gonna have a great KD ratio. All right, at least 2 to 1, if not maybe 3 to 1, which was good for me back in my noob days. And just as soon as someone turned around my corner, just boom bop, hit him in the melee, boom, out of here. Let's go. That was my strategy back in the OG Xbox Live days with the headset, and I was probably 13 or something. And you know, my voice was high pitched enough that anytime I talked, everyone, everyone on live would just be like, "Shut shut up, kid! Who let the kid in?" And I was over here like, "Whoa, adults play video games? This is crazy." Anyways, I was a camper. I was definitely a camper, Ole. I didn't know, man. I didn't know game culture. I was just like, I was just trying to shoot some guys. And if I ran out trying to be a hero, it exposed how bad of a player I really was. I was a much better gamer at Mario games and at Madden games and at Minecraft and at RPGs, the shooters, I'm weak sauce. Weak sauce on the shooters. Man, I'm excited for you guys, excited for this day. Really hopeful that it's going to be an exciting one. Any other thoughts in the chat or in the comments if you're watching this video later on YouTube? Any thoughts on all this stuff? Right? All this fun. The kind of the tea leaf speculation. Are we about to hit a pretty exciting window? And then any thoughts on the fundamental value, like these assumptions within the collectibles business? I didn't talk about it, but if you were to if you were to take the weighted average of software, hardware, and collectibles and sum it up for the retail business, you've got a 1 year target, like a 1 year revenue of 5.4 billion, kind of worst case. So basically, if you were to take like Q3, Q4, Q1, Q2, or if you wanted to just say 2026 numbers, I'm saying worst case realistically 5.4 billion in revenue and a net profit gross margin of 20.7, and then a net earnings growth rate moving forward of 10%, $329 million of operating income, PE of 26.5, $8.7 billion. Mid case, 6.2 billion, 23% gross margins, growing 20% from there. PE of 37 on a $655 million profit. And then kind of best case scenario, 2026, we see $7 billion of revenue. You're seeing kind of 27% profit margins, which all these numbers are lower than what the profit margins are currently, the gross margins, But I'm assuming Power Packs is going to bring it down. That's what I think Cohen kind of hinted at when he talked about how 80% margins at super low volume in sales just doesn't matter to him. I think he cares a lot more about these numbers down here. How much income did your business make? I think that's what he cares about. But it's certainly, it's possible, right, that their margins are actually even better than these, in which case their earnings are going to be even better. And then obviously their valuation would be higher. So 28% growth from 7 billion, $61 billion in value, weighted average PE of 55. Again, that's if you take the weighted average of all three lines of their retail business. I am in Central Time. For now. Jose says, how will this manipulation with GameStop end? How will it end? That's a really great question. How will it end and when will it end are really two similar questions. I think that the real answer to how will it end is right here. The way it is ending is that GameStop is making it end by continuing to grow their cash pile, which is just impossible to create a bear case on net cash. It's just impossible, particularly when you then also are now growing the revenue numbers, you're decreasing the costs, you're growing the operating income, your interest is growing through cash and Bitcoin, your net income is growing. Like GameStop is how the manipulation is going to end. Now, for us, it feels like forever. Let's go. Let's go. It feels like forever because if you're like me, you started investing right about here, January 29th, 2021. So for a lot of GameStop investors, what we feel emotionally is GameStop has, and then obviously what happened here on the 29th, the buy button gets turned off, it's shorted into oblivion. This squeeze would have continued to go higher until infinity, until who knows when, but high enough to where many, many financial institutions would have gone under. And basically, governments and institutions said, we'll deal with the ramifications later. We're not going to let this happen. Kill the momentum, short it down, etc. So, what do GameStop investors feel? We feel like it has been almost 5 years now, more than 4.5 years of price manipulation. And in a sense, that's true because, like I said, this squeeze would have squozen, right? It would have gone higher were it not for price manipulation. But from a fundamental value perspective, this price suppression, you were suppressing a technical breakout. But it's just as easy to say that the spike in GameStop was price manipulation. Like, if you want to think about it that way, it's like GameStop going up was the manipulation in a sense. Hang with me here. I'm not trying to say, anyways. GameStop becoming worth, where's market cap? In 2020, GameStop being worth $14-15 billion, despite having negative earnings and shrinking sales, like falling off of a cliff type of sales, that in a sense was price manipulation. And it started with internet memes, right? And I was on for the squeeze play, like many people were for the squeeze play. But a squeeze is a little bit like it's manipulation for bears, to try to squeeze short seller. It's manipulation on the bull side against bears. You know what I'm talking about? What I'm saying is fundamentally, GameStop could not support this valuation. So was it price manipulation all these years? In a sense, yes. Because again, from a technicals basis, just from the amount of short interest that was out there and probably still is out there, and all the crazy mechanisms by which short sellers can use, and all the ways that the system kind of enables the institutional seller, even at the expense of Main Street, right? It's this unfair game that retail investors are playing in. And so, yeah, it's price manipulation. But also, if you're just talking about, you take out the short interest, right? You take out anything related to the squeeze, the breakouts, like the YOLO, what could have happened. And if you just pretend that there are no shorts and there are no calls, like there's no derivatives market, all you have is the business. No one in their right mind would pay $15 billion for a company that's losing $200 to $400 million a year and sales plummeting off of a cliff. No one would pay money for that. Like you would have to pay someone to buy that, right? Which is where it was valued before the mini squeeze, market cap, once you net out their book value, Ryan Cohen bought in, was negative. it was a negative $400 million company from a fundamental value, the way the market valued GameStop before. All that to say, I'm being long-winded to answer your question, Jose, but how does all the manipulation end? It's like, well, it started to end right there in April of 2024 when GameStop reported a net profit for the full year of 2023. So this number, 6.7 million in net income, was reported in April of 24. Once that happened, the worst case bear thesis was officially killed off. Like, GameStop was not going to go bankrupt. They officially raised enough cash, cut costs enough, stopped the bleeding enough to where even if they continue to shrink on the top line, there will be some value for GameStop. It's worth something, right? But even in April of 2024, what would someone pay for this business that barely squeaks out, right? All these operations, right? Billions and billions of dollars of money, of sales, all these employees you have to hire, all these costs you're managing, all this cash that's earning interest. Operating income was still negative, so you still had very little clarity. I mean, again, the improvement year over year was crazy. So if you got involved in GameStop back here, like I did, and you felt like this company can continue to go way higher, the squeeze play is play number one, the long tail fundamental outperformance is play number two. Basically, what happened is play number one got manipulated, but play number two needed all this time to even come online. Play number two, GameStop, the fundamental valuation story, is only a couple months old, a couple quarters old. Because again, what was the market paying for this business that barely squeaked out a net income profit, even though their operating margin was negative? Well, it was a $2 billion market cap net of their book value. Including their book value, 3.5 billion. And it's like, man, 3.5 billion for a company that barely makes any money, it's tough to swallow. Like, again, if there weren't short sellers, this wouldn't be the oh my gosh buying opportunity. Like on a PE basis, what is that? 513. So that they had a price to earnings multiple of 513, or even if you want to net out the cash, 313, right? Their price earnings was way higher than Nvidia's, way higher than Palantir's, way higher than Peloton's was during 2020, right? Like a crazy PE. So it's still, even here, was not a quote unquote good buy from a pure fundamental value perspective. I was buying hand over fist because GameStop does not exist in a vacuum. And we know that short sellers are still shorting the company. And we also knew, if you are following the year over year numbers, you knew that this was just the beginning and that it was going to get better. And generally, you trust in Ryan Cohen, right, to continue to improve upon the business. And you knew that the costs were continuing to come down, right? So, like, I was definitely comfortable buying GameStop aggressively in this window. But from a fundamental value perspective, GameStop still wasn't being suppressed from a fundamental perspective. They were still being suppressed from a short interest perspective and from a technicals perspective. And for most of us investors, there's no difference. It's like no price target, just up, right? And so it all feels like, man, we've been through 5 years of price suppression. But how long long have we really been undervalued? It's like, well, for the full year of 2024, GameStop's operating income was still negative, but their cash pile is now enough to where their net income is huge. And so it's like, okay, we know that GameStop's not just going to barely exist, but it's going to, like, this. We knew that this was the last year that we're ever going to see an operating income loss for GameStop, right? But we still didn't know what was going to come of the PSA partnership. They announced they're going to start grading cards, but it's like, okay, how much money is that really going to do? Hard to say. From a PE basis, adjusted, you're still at a 42. I'd say compared to a lot of retailers in the industry, a 42 on a price to earnings basis is definitely pretty rich. You're on the much higher than most all specialty retailers at that point. And so even this past April, was GameStop being suppressed from a fundamental perspective? Not quite. I would say just since Q1 is, and by the way, you can look at my channel. I made a video why GameStop's worth $386 a share that I made in April of this year, which is when these numbers came out. When these numbers came out, I was like head over heels, and I have been the whole time, because I see the long story, but I just didn't, back here, I didn't really know how long it was really going to take for the fundamental story to catch up. But it just caught up in Q1, which was reported when? In June 10th. So 4 months ago, we got the early numbers of the Collectibles division, which reported a 55% growth year over year on just their collectibles. So we knew that, okay, growth is coming. At the same time, it was still an operating income loss, but a tiny operating income loss in Q1 for a retailer is not even a big deal. And obviously, net income wise, they were still profitable. And you knew this was the last Q1 of operating loss that you're ever going to see in GameStop. So yeah, was it still a little bit rich from a PE basis? Maybe. Particularly, again, this PE, this takes into consideration their earnings from their cash. If you were to take the earnings from their cash out of the picture, then it'd be even lower or even higher of a PE. Like, it'd be less likely that you would describe it as being overvalued or undervalued. Less likely that you'd say it's undervalued. Geez, I'm being so confusing. But what happened? You saw the gross margins go up like crazy year over year, 27 to 34. So you knew the margins they were getting on this collectibles money was crazy. And you also knew that we're about to, the Switch 2 is about to start selling. And so you knew sales growth was around the corner as well. And so I'd say right here in Q1 is really the first time you could say that GameStop was undervalued fundamentally. Now you could still say, well, we want to see the numbers, right? We want how much money is the Switch 2 going to make really? Because year over year in Q1, this was still a loss on the top line, right? $150 million lower in sales on the top line. So again, if someone was still hyper bearish on GameStop in terms of their legacy business, I would say starting in June, I would say that bearishness would have been a little short-sighted. but not like indefensible. It's like, okay, fine. You want to wait to see the Switch 2 sales? Fine. you know? Now, similarly, someone could say that my valuation for the collectibles business is too rich, that I'm baking in too much growth for power packs and that they want to see it first. And I would normally say, fine, except that Ryan Cohen just told us that the sales are going to be 1.5 billion for the year. Like he just told us they're going to be up here. And so do you need to see these numbers come out in December for you to know that this valuation really is genuinely much higher than where it's currently trading? I don't think you need to see it. But even if you took out that explosive growth out, this was before we had those numbers. I valued their collectibles line at 17 billion, which is still much higher than where it's currently trading. So even if you don't see those numbers yet, you just go off of the Q2 numbers and it's like, okay, we are officially trading. Once you net out the cash, like we are trading very modestly, a 14.8 if you wanted to lump their cash earnings and retail business together, which is still lower than the entire industry, despite the fact that GameStop's growth trajectory is much higher. So again, anywhere from either June, I would argue, and definitely since this Q2 earnings came out, which was 1.5 months ago, 6 weeks ago. So are we deeply, deeply being suppressed on a price basis right now? Yes. How long have we been suppressed fundamentally? Fundamentally, it's only been 5 months or 4 months since we've been fundamentally suppressed. Now we've been technically suppressed for almost 5 years. So when is GameStop going to break out? I'd say, or how are they going to break out? Obviously, this is how. The fundamentals is forcing the stock higher, maybe not yet on an earnings multiple basis, because obviously their business is not being respected at all from a multiple basis. And it might be several quarters until they're trading at a fair value, right? The fair value being upwards of $100 billion. Might be a while till we're there, but to at least have some multiple, how are we going to get there? I think it's related to the fundamentals demanding it. And even if it takes a little bit longer for the multiple to kick in, you still do have the cash that's kicking in. When they crush this quarter, that's that much more net income that's going into their bank account. That's then that much more cash that they have, that then is that much more interest income they're going to make in the next quarter. And then when they crush the next quarter, it's going to be even that much more cash that then they roll forward, right? And then they're still raising more cash, right, each quarter. And then you have, here come the next consoles in the console cycle, right? And here's the next line of power packs. It's not out yet. So the question is really, how much longer can the suppression continue? Technically suppressed for almost 5 years, fundamentally suppressed for almost 5 months. I think GameStop signaled when they issued their warrant dividend that we are officially on a countdown that's 12 months or less. I think GameStop's telling you the fundamentals are finally here, finally ready to roll, finally ready to support a much higher business valuation. And maybe it kicks off now. Maybe it waits until these December numbers come out. Maybe it waits until their 10K comes out. But I think GameStop's telling you that they are ready for the stock to begin trading higher. And I think Ryan Cohen is hinting at as much as well, of course, and many other reasons that are indicating that way. So when does it end? End is a little tough because end makes me feel like you're talking about like MOAS, and I'm like, I don't know. I don't know how long until that, you know. But to say we're 20% higher, we're 30% higher, we're 50% higher year over year, we're growing in a way that's outpacing the SPY, and slowly the gap between our fair value and where we're trading is closing, right? It's not going to overnight be worth $100 billion unless it is. If it's overnight, I would be pumped about that. But if we're at least closing the gap, then I think you've seen what you need to see to know that it's going to continue closing the gap. And that's great because the 100 billion is not a hard ceiling, right? So right now, if they're worth 96 billion fundamentally, but their market cap is 10.4, that means there's an $86 billion gap in fundamental value. So if they trade at 50 today, $50 a share, then oh great, that'll be a 76 or $75 billion gap instead of an $86 billion gap, right? So we're on our way towards ending the suppression, and I think we're definitely on our way. I think how we got there is the fundamentals forced it. Whether or not the squeeze immediate crazy appreciation happens, I don't know. There's some portion of the pie that is dedicated to that, right? When you start thinking about your portfolio, there's some portion of your GameStop position that is fixated on the squeeze of all squeezes. Then there's some portion that's just dedicated on GameStop doing what it does, continuing to outperform fundamentally. There's some portion of your GameStop position that's based on, hey, what's the worst case scenario for GameStop? And what's the downside risk? And if the risk is still super low, and right now my risk scenario is a $50 per share price target, right? So a portion of your portfolio is, how do I protect my downside risk if GameStop fails to execute? A portion of your portfolio in GameStop is, how is GameStop going to outperform even if the market's bad, how can they continue to still execute really well? And then a portion is, what if things really hit the fan in the macro? How is GameStop positioned as, through its Bitcoin position, through its play as an alternative, through its negative beta, through its high cash? How is GameStop prepared to outperform if we have a market crash, right? And so there's different, and everyone's going to have a different weight. Some of you, 100% of your GameStop position is a MOAS position. And for some of you, 90% of your GameStop position is just a macro hedge position, right? Everyone's different. And so how you weight it ultimately is your choice, obviously. But does GameStop break out and close the gap? I think 12 months or less, that starts to happen. And I think it's going to be less. I think it's more like 6 months or less. Because I don't think GameStop would issue these warrants if they're thinking, okay, by September 31st of next year, we'll cross 31, which means we'll be super close to 32, which means if we have a good last couple weeks, people might make a little bit. It's like right now the warrant is worth $4 a piece. So basically the warrant's pricing in that GameStop's going to be worth 36. It's a break even at 36 1 year out on the warrants, right? $36 a share. If you were to hold your warrant from now until next October, then you've at least broken even. And so why does that enthuse investors? No, not really, right? That doesn't excite investors to be like, oh, great, I held these for a year And it turns out I should have just sold them at market value when they were issued, right? That doesn't excite investors. So at what point do investors feel like we really got good value for these warrants? It's like, well, maybe it's $40 a share or so. So okay, if you sold your warrants right off the jump, you could have sold them for $5. But if you held them, they ended up being worth $8, you know, of extrinsic value or intrinsic value, right? The gap between 40 and 32, the strike, the conversion price, whatever. It's like, okay, at least $40 a share a year from now. So almost what? That's basically a 40% improvement. I'd say that's the minimum that GameStop wants to trade at. And I don't think they want to wait until October to be trading there, right? I don't think they want to cut it that close. So again, within 6 months, are we at 40 a share? Probably. And if we're at 40, why not 100, right? Why not really begin to, like, how long can the suppression continue once the breakout begins, right? That's really the question. And Jose, I don't really know the answer, but I don't care too much if suppression continues, but we are gaining ground. Like, if the gap between fair fundamental value and market cap is closing, that's good enough for me at this point. If it continues to close the gap, that's good enough for me. But that would still be suppression. That would still be manipulation, you know. When is the day when there's no manipulation at all in GameStop stock? I mean, it might be 30 years from now before some of these institutions are finally closing their swaps and shorts, you know. But every stock has some amount of short interest. So again, that's not necessarily pure manipulation, but it would be great for the stock price to at least be in the ballpark, the market cap to at least be in the ballpark of the fundamental value of the company. What else? Sorry that took super long to answer that, but I wanted to give you all a thorough answer. Arca says it will end with S&P 500 inclusion, similar to what happened with Tesla. Yeah, Tesla, the price suppression ended before their inclusion, but the inclusion was like the next leg of their, 15-month kind of squeeze, 10x, a 10x over 15 months. Do we see a 10x over 15 months in GameStop? Totally possible. Totally possible. And that would still just be kind of the beginning of where they could ultimately go. But a 10x, I'd be pretty happy. Pretty happy with a 10x, $100 billion company. Really easy to see it justifying that valuation, And yeah, I think the S&P 500, again, that still kind of begs the question, well, when does that happen? They're going to qualify for it before the end of next year, in my opinion. And that doesn't mean they're going to be admitted into the S&P 500 as soon as they qualify for it, particularly, again, if there's so much price suppression happening, so many people that are like anti the stock, then you would assume the S&P 500 committee is like a part of that, right? That they are also wanting to suppress the stock. And so how many quarters do they delay S&P 500 inclusion before they finally inevitably have to allow GME in? I have no clue how long they could, hypothetically, they could delay that forever if they really wanted to. But at a certain point, it would just be ridiculous. Beckett Cat says, hello, can I do anything to love or support you? Thanks, Beckett Cat. I appreciate that. I mean, I like the comments, man, or woman. Thank you for your support. You don't have to do anything. Everyone is valued. This channel is something that happened by accident, and it's just a way for me to share education, empower you guys, educate yourself, know what you're doing, feel more confident. And yeah, if you ever want to give a super chat, a super thanks on a video, if you want to become a member, if you want to get some Budget for Life merch. I'm gonna get some merch for Christmas from my Budget for Life store. Definitely would appreciate it. Oh, Herman says, "Holy Beckett cat here." Oh, this is the Beckett cat. Beckett cat, you're the rubber ducky Beckett cat, right? Oh, Adrian Farmer says, "Love to see Beckett cat here." Yeah, sorry I'm a little late on it. Thanks, Beckett. Oh yeah, so you're definitely not a woman then. Bro, thanks for the videos you're making. I'm holding some calls too, man. So I'm excited for this window. And yeah, thanks for the comment. Seriously, the GME community runs deep. Runs deep. Arca says they're not gonna be able to delay it indefinitely. Yeah, I mean they could delay it I think they could delay it 4 quarters pretty easily, but beyond that would be pretty hard to see. Like they delayed like Robinhood stock, they delayed several quarters. That Robinhood, the company, qualified, but they were not admitted. So sometimes with fast growing companies or companies that, whatever, there's just some speculation on if their earnings are going to be sustainable or whatever. They use those as justifications to delay inclusion. But once a company gets large enough, like if GameStop has $100 or $200 million market cap, it's like it's so large that you just have to include it now, because if you wait any longer, the impact on the stock is going to be so dramatic. That's part of what happened with Tesla. It got so big, like the company was so valuable. It's like it's going to have a 2% weight of the whole index the day that it gets admitted. Like you got to do this now compared to normally a company that gets admitted is on the lower end of the qualifying market cap. And so, okay, it's 0.001% of the SPY, no big deal. But when you get admitted and you're already 1, 2, 3, 4% of the SPY, it's like, holy smokes, this is going to be a huge buying demand for the stock. Man, I'm feeling really tickled that Beckett Cat was here. If you're still here or not, I don't know, but thanks, man, for being here. Super. I've watched a couple of your videos, and I'm about it, man. I try to stay in my lane, as far as my YouTube presence. I try to focus on the fundamental performance. You got people on the memes. You got people on the short-term trades. You got people in the long-term trades, options flow people. You got the swap theory people. You got the GME kind of trash talker people, influencer hype people. There's all the different people, covering this company, so many different angles of interest in this company. I'm trying to mainly focus on the fundamental value and fundamental performance, because I feel like that's where I can bring the most perspective. Holding pretty good at 25 so far, y'all. I'm probably going to wrap it up here in a sec. But again, thanks so much. All the subs. Got a couple more subs. Thank you guys. Appreciate it a lot. Exciting to see where we're going to go. All right. Any last words? 111 strong in here. Some people pumped for the stock this morning. I'm pumped for the stock. I'm pumped. If you're pumped, I'm pumped. I'm pumped if you're pumped. Man. Thanks, Austin B. I appreciate it. All right. Let me wrap this up. I'm going to go listen to the Halo 3 soundtrack and watch the stock and make my breakfast. That's all I got for y'all on this one. I will see y'all in the next one.